The New York Stock Exchange is losing trades at the fastest pace in a year. NYSE Euronext executed a record low 30.2% of May's trades, down 2.8 points from February. And NASDAQ isn't the beneficiary of the NYSE's loss. Direct Edge Holdings and Bats Exchange are. They've more than doubled their combined shares since August. NYSE Euronext market share continued to decline even after it bought the Archipelago Electronic Exchange for $3 billion. Those losses highlight the growing influence of alternative trading systems like Bats and Direct Edge, which are both owned by Wall Street firms. Joining us now to talk more about his exchange's rising market share is Direct Edge Holdings CEO Bill O'Brien. Mr. O'Brien, welcome to Bloomberg News.
Thanks, Mark. Happy to be here.
Sometimes you see a space and you navigate your way through it. How did you do it?
Well, it was about not assuming that this was a pure commodity, right? As markets have gotten more automated, more volume has come into the system, it's created opportunities for firms, rather than differentiate themselves on just how big they are, offer new products and new solutions to the trading and investing community and use that as the basis for gaining a foothold and becoming a significant part of the market, as Direct Edge has.
Bloomberg News talked to Joe Ratterman. He's the CEO of Bats Exchange. He said that traders want to foster rivalry by distributing their business to multiple venues. And he went on to say that the reason has a lot to do with keeping diversity of liquidity pools and resiliency. Would you agree with that assessment?
I think that's right. It's really no different. The trading of stocks is no different than any other product. Consumers, in this case traders and investors, usually do better when there's competition as opposed to when there's a monopoly or a duopoly. This is a classic example of how the stock market trading has evolved over the last few years.
You have gained market share, but rivals are also gaining market share. Is there enough room for everybody here?
I think there is, as long as you keep innovating. If you just assume that all it's about is being the biggest and relying on scale and leveraging that scale, then it's going to lead towards consolidation in the industry. But if you continue, Direct Edge has really been a company that's focused on product innovation. We're not trying to make the cell phone a tenth of an ounce lighter. We're trying to come up with the iPhone or the next iteration of that type of innovation. If you keep doing that, you're going to provide enough value to carve out a very nice place for yourself in this market.
Is there a ceiling to your market share because of the volume that brokers have to execute?
I think there is, but it's important to note that over the past several years, that pie has been growing significantly through a variety of reasons. Better communications and data dissemination technology, the rise of products like ETFs, which is now challenging other non-trading vehicles like mutual funds, has kept the pie growing and creates opportunities for firms like ours.
Mr. O'Brien, we appreciate your comments and your views. Thanks for coming in and sharing.
Thank you, Mark.
Appreciate it. Bill O'Brien.